Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 18th of July. So the ECB meeting has concluded with Christine Lagarde, the ECB president, coming across a little bit more on the dovish side than expected, and the euro fell as a result, while equity indices in Europe bounced. The German DAX index, as you can see here, has managed to bounce from the bullish trend line that has been in place since the turn of the year, really. I know we've had a couple of closes below it, but generally speaking, it has held firm for the time being, just about. And support at around 18,330 to 18,350, the shaded blue area, also held, and we've seen a small bounce. But in light of the big drop in technology stocks we saw the previous day in the US, it remains to be seen whether this recovery can hold ahead of Netflix earnings tonight. Below this area, we have a more important support zone around 18,050, which was tested a couple of times last week when the political situation in Europe was at the forefront of investors' minds. The fact that we've held there suggests that we could well see a move to a new record high above May's 18,928 high. And to get there, we'll need to break out of this descending triangle pattern that you can see on this daily time frame. As things stand though, consolidation is the name of the game. So let's see if we'll get any further bullish price action along this bullish trend line before turning decidedly bullish on the German DAX index. Now, I mentioned the Nasdaq falling sharply in the previous session, and it's continuing to struggle after breaking back below the 20,000 level, which was previously resistance, and it didn't turn into support the previous day. But it could find support once it retraces a little bit deep, because in the past we've seen several bearish attempts to move the market decidedly lower, failed, and this could well turn out to be another such occasion. So just because we've seen a bit of a pullback, it doesn't necessarily mean that the market has stopped, but it certainly does suggest that the technology stocks performance has weakened. And as a result, we've seen investors move in other sectors like financials and energy names. So if I show you the chart of the energy fund XLE, you can see that it has broken out of this bullish flag pattern to the upside, testing potential resistance area in this shaded gray area, which was previously resistance as well. So a move above that area could further fuel the rally. Likewise, financials have broken out of this consolidation pattern to the upside, and all of this is helping to provide strong support for indices that are not very tech heavy. For example, the Dow Jones, which has been rallying aggressively in the last several sessions, as you can see over here, after breaking out of this area of resistance at around the 40,000 mark. The Dow is now approaching potential resistance in terms of Fibonacci extension level. The 161.8% of the most significant drop from the May high comes in at 41,366. So that could be an area where we could see some profit taking a run. Nevertheless, lots of support levels on the way down need to be watched closely because the trend is bullish, and we could well see the buyers step in around those support levels, such as those shown on this chart. Another sharp drop in US crude oil inventories caused oil prices to rally sharply in the previous session, but today we are seeing a bit of a retracement against that rally as prices remain contained inside this consolidation pattern, namely a bull flag pattern. So we need to see a breakout above the resistance trend of this before one could conclude that the trend has resumed after its V-shaped recovery we saw a couple of weeks ago. That then gave rise to further technical buying above the breakout area of 80, which then eventually ran into trouble at around 84, where prior resistance and the 78.6% Fibonacci retrace provided stiff resistance. So the key support area to watch is the shaded gray area, which held just about in the previous couple of occasions. But if we see a closing break below that area in the coming days, then at that point, I think the technical picture would look somewhat more bearish. Following today's dovish-leaning ECB press conference, the euro-dollar has dropped, testing potential support in this area of around 108 109.95 to 109.10 zone, where previously the euro dollar had struggled ahead prior to the breakout that we saw early this week. This area could now turn into support. If it doesn't, then we could see a deeper pullback towards the blue shaded area where the backside of these broken trend lines converge with the 21-day exponential moving average, as well as the 200-day simple moving average, all coming in at around 108 area to 108.40. So that area is going to be the most important support to watch should we see a deep pullback. On the upside, the next potential area of resistance is at around 110 area, where previously the euro dollar had struggled. But the key question in as far as today's session is, can support hold here, or do we go back below it? For more market insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.